Talking Point. I'm your host, Niraj Shah. HCL Tech came out with numbers Friday evening, and you would probably say that the quarter may have been a bit of a mixed bag compared to what the estimates were because of a higher tax incidence and a one-time bonus. The bottom line and the EBIT numbers got impacted. However, on the deal wins, the company walked the talk and came out smelling like roses. The question is, can they extend this into FY22? Let's get the perspectives of how FY21 was and how FY22 could be. With the two gentlemen, they need no introduction. Prateek and CVK join us right now. Gentlemen, both of you, thanks so much for joining in. And I hope all is safe. Let me just kickstart CVK with you. How do you look at the quarter? Because yes, it was anticipated that there would be a margin hit because of the one-time bonus that you gave, but there was also this higher tax incidence which have impacted the bottom line temporarily. There was also this guidance that you'd given that mode 3 will see a number which would be patchy compared to what we saw in quarter 3. But overall, how did the quarter and thereby how did FY21 as a year end for you, you think?
Yeah, Niraj, hope you're doing well and you're safe. And if you look at the quarter, we had given a guidance of 2 to 3%. We came bang in the middle of that, 2.5% constant currency growth. And even the margin guidance, whatever we had given was for the full year between 21 and 21.5. We came at 21.4, excluding the one-time bonus, of course, which we called out that will be a additional impact to the bottom line. So the quarter went pretty much in line, and there was seasonality in the mode 3 and the product business, which played out. Our services business, IT and business services delivered 4.4%. Engineering delivered a little less than 1%. So I think the services business played out well. And coming to and I think the most important aspect, as you captured, was the record booking. This is the highest ever booking that we've done in any quarter of net new deals. And we closed about $3.1 billion. We signed deals. And this is across geographies, service lines, verticals. So this was a massive achievement. And of that, 19 large deals, including a couple of $250 million plus deals and several $100 million, $50 million kind of deals. And this is again, I mean, if you see the year, we closed some 7 billion plus. And first quarter was bad because a lot of pipeline, which was in a reasonably mature state, some of them dropped. But during the pandemic, we reinvented the whole sales model, right? Because everything had to be done remotely, proposals, client visits, demos, bid defense, contract negotiation, everything was done remote. So I think it took the Q2 was really getting all those things in place, and Q3 was reasonably good. Q4 was the highest growth, and we are also exiting with the highest pipeline. I mean, little more than what we exited in the last quarter. So generally, the year has gone very well. Even in a pandemic year, we could deliver 2.5% growth in dollar terms and 1.1% plus on a constant currency terms. So we are very happy, very satisfied with the performance in a most difficult year. And more importantly, we have taken care of our employees. We gave special bonus. Now we've taken care of our shareholders. We gave them an interim special dividend of 10 rupees for the $10 billion. So I think we've done the best that we can for all stakeholders during the year.
I would want to understand from you, Prateek, CVK first, and then I'll come to Prateek on this as well. Would you have at the start, at the beginning of FY21, you of course had refrained from giving the guidance then for obvious reasons, but a dollar number organic of slightly above 1%, 1.5%, unless I'm very wrong, would you say that at the end of the year you are happy with that, or is it a bit underwhelming? And then part two of my follow-up question, CVK, is on the guidance, right? The street, by virtue of the standards that you set, expected you to, at the bare minimum, give a number of 10 to 12%. In some cases, 10.5 to 12.5. You mentioned double digit. Now the street would believe that would mean 10%. Is that also being a bit cautious?
No, I don't think so. No, double digit means starts from 10,
99.
right?
Instant 99.
Yeah, I know one of my colleagues talked about 99% as well. I think it's the floor, and we think we booked a lot of business in this quarter, and some of this execution would take some time, and also uh, there is a lot of opportunities as well in the market. So we just want to focus more on booking as a metric rather than very sharply focus on how much we will deliver on the year from a revenue perspective, because there is enough momentum in the market, and it's the right thing to do to kind of focus the organization around booking metrics instead of very narrowly focusing on revenue metrics. So we said we will go a little bit at a high level on the revenue metric and said double digit growth, and we're going to give you more disclosures on the TCVs as we move forward, like we've started this quarter and this year.
No, that is very impressive, CVK. But I'm just wondering, are you being conservative right now for because there are uncertainties around, or is it the other way around, that people should now expect that if you're saying double digit, that's the bare minimum, but you will expectedly do a better than the lowest common denominator that you can come out with?
No, Neeraj, I don't want to qualify it because I mean we just announced guidance of double digit, and let's see how the year pans out. I don't want to throw out any other perspective here.
Okay. Prateek, comment on how how would you sum up this year as well? Because your comments as well on the release extensively speak about a number of factors. Your cash flow numbers have looked pretty impressive. And when I look at the quarterly numbers, when I look at the top four companies that have come out, you being number three, the attrition numbers vary quite significantly between company to company. And I hear across the board that both attrition as well as hiring is at a very fast pace right now. In stock market terms, we call that volatility. I'm just trying to understand from you, how are you seeing that picture currently?
One of the universities I went to taught me a new word. It's called VUCA. V is for volatility, like you said. U is for uncertainty. C for complexity. And A for ambiguity. So, yeah, jokes apart, I think it's been an unprecedented year by all measures that you can have. But I think as HCL, we take pride in doing the right thing at the right time. Even back in June, July timeframe, when we sort of declared our results for the June quarter, we talked a lot about doing the right thing by customers, doing the right thing by employees, doing the right thing by partners as well, and everybody in the ecosystem really. And that is what we have focused on in this very tough year. And it has so transpired to our good fortune that, despite having a big drop in the first quarter, we got solid growth every quarter thereafter in the balance quarters. So that at the end of the year, we could still end with a positive growth for the year. Like you were asking, you started your question with that. Could I have imagined that this would be a growth year based on Q1 or even Q0, which was like, March, April, the COVID had just started? We could never have imagined. Nobody could have imagined.
Agreed.
All staring down a tunnel with no light at the end of the tunnel. So I think all things considered, the year has turned out fun at the end of the year, but it has been a grueling those 4 quarters, and hopefully, FY22 is a lot better. It's not looking like that, at least from an India perspective, given the way the cases are trending up, especially in the last 2 to 3 weeks. Even Europe is quite impacted. So it ain't over till it is over, and we can only hope to get vaccinations done faster and get back to business.
Sure. Yeah. So just wondering, Prateek, what goes into this guidance of 19 to 21%? Why is the lower base shifted lower? I mean, after quarter three, almost everybody anticipated you to be above the earlier normals. Why have you gone back to 19 to 21%? Are there wage pressures?
I'll let CVK address that one. Uh,
You want,
he's got a
you want to
better.
comment on that, CVK?
Yeah, sure. So I think, I mean, obviously, last year we had only a 9 month impact. There'll be one additional month of impact, and we are mostly proposing to give salary hikes as per the regular schedule now, which is July and October for us, July for junior and October for the senior colleagues. So that's definitely one. And there are a lot of opportunities, and we want to open up some new geographies. There are certain additional mode 2 propositions on which we want to invest. I mean, 2% is the right range. I mean, margins, I mean, we had at some point narrowed it down to 1%, but generally the industry trend is about 2%.
Yeah. No,
Is
I
the
was just
normal.
wondering if the 2%, the street really loved what you did in the end of quarter three and expected it. If you give 2%, it'll be 20 to 22%. You come in 19 to 21. So are there some exceptional circumstances that you fear? Is it wage related or is it something else?
I think there is a little bit of wage related for sure, and then there are other investments. We'd also, as a part of our planning, we baked in some amount of travel and transport coming back, almost 60 basis points we assumed. Now, whether that will happen or not, we don't know, given the current situation. But we, if things become better, we do believe people will end up traveling and meeting clients and all other things.
God willing, that happens. Gentlemen, I'm going to take 3-4 minutes more. I know we kind of running short of time, but there are a few things that I want some clarity on. Prateek, coming on attrition, you guys have controlled it really well. Would you be able to tell us about how is that side of the equation looking? Because I'm guessing a one-time bonus and all of those other factors helped. I see in a presentation that CVK made at the IIFL conference in February that you guys are ranked very highly on the employee satisfaction metrics as well. But just tell us a bit about how is that picture looking and other factors which might impact, because the currency, for example, is very, very volatile, Prateek.
Yeah, Niraj, I mean, I have always believed attrition is, I mean, it is to some extent linked with what you pay people, but there are bigger factors at play. And speaking for myself, the way I look at it is that, doing the right thing at the right time for our employees should have its own dividend. And the way we have taken care of employees right from March of last year, so more than 14 months, kind of 13th month running now, should make a difference. And, we've done a lot of, I mean, of course, spoke about it in the press conference, a lot of stuff, soft stuff, hard stuff, all kinds of the right things to do. And that, to my mind, is the bigger factor. And, people value that. At least I do, and that's how I see people generally valuing that. I think that plays a bigger role. Of course, we are hiring very fast as well, despite all the pandemic influence headwinds. But this quarter we hired close to 9,300 net people.
Yeah, that's pretty impressive. Okay, lastly, and either of you can come in, maybe CVK can start off and Prateek can wrap up. But just a word on the internals. Mode 2 was very strong for you in quarter 3, and I think it's continued well in quarter 4. You had guided to mode 3 being weak in quarter 4. It has turned out that way. But I think when I look at all the reports, almost everybody seems to be suggesting that if you can get color on the growth and the margin trajectory for the products in the mode 3 business for FY22, it will be really helpful. Can you talk a bit about both of these?
Yeah, mode 3 is a product business, as its seasonality, and that's why you saw a decline this quarter. And moving forward, I mean, as I explained in the analyst call, there is a big part of it which is strong growth trajectory kind of products. There is a smaller part, maybe 25%, which has a declining characteristics. So overall, we expect a low single-digit type of growth in this business, at least in the next year. But the long-term outlook looks the growth will increase as we move forward. I don't know if
Okay.
Prateek, you
And
want to
Prateek,
add anything.
BFSI, which has remained relatively soft.
No, I think 4.5% is a good
Yeah,
growth
actually,
given
Prateek, you
this
can
year.
add
It's
something
much
and
better
then
than the
BFSI,
company
please.
average. It will continue to do well. We see a lot of opportunities, a lot of demand open demand that we have is pertaining to the BFSI vertical. And their banks are spending, especially the discretionary spend. They've opened up and they will spend in 22. They will expect to spend in 23 as well. So the outlook on this segment is quite good.
Okay. Gentlemen, my last question to you before we wrap this up. If IT is supposedly in a technolution, super cycle, what have you, I can understand double-digit growth for FY22 or FY21, but FY21 was a low base year any which ways, right? So when I look at your numbers, and if I map in, say, 11-12% growth for FY22 or FY21, and then I look at the CAGR from FY20 to FY22, it is higher single digits. Why that leaders like you are on this growth trajectory? The deal wins are fabulous. Why is it that the revenue run rate is not
No, I
high?
think we should take FY21 as an aberration. I think it's because 3 quarters played out well, 1 quarter had a steep decline. So we should take that as an aberration, and 21 could be the start point of a slightly more accelerated growth from an industry perspective. And we will update you as we move forward. We've given a guidance for 22 at this point, and we are very focused on executing to that, Niraj.
Okay, Jaman, thank you so much for your time today, and I wish you all the best for the quarters ahead. Have a great year and stay safe.
Thank you, Niraj.
Thank you, Niraj. Stay safe. So, thank you.
Thank you. And viewers, thanks for tuning into this edition of The Talking Point.